Hey everyone, it's Mike Mincher, Chief Investment Officer with Financial Synergies. And this is a market in minutes that's going to be a little bit different because we're nearing the end of the year. And I apologize, I've gotten out of my rhythm a bit here with the holidays and not really able to stay in the swing of things as per usual. So I missed the last market in minutes, the week in perspective. So I apologize for that, but I'm going to make up for that a little bit here, and we're going to talk about kind of what's happened over the last month, and then look at year-to-date numbers, and then of course I will have much more on the entire year and the full quarter in the first couple weeks of January, somewhere around there. I'll be putting together some charts and a report, and hopefully do some videos as well centered around what occurred and how we see things going in the new year. Of course, we don't have any predictions per se, but if things continue down their current trajectory in terms of rates and things like that, hopefully we're in for a decent 2024. Who knows? We don't forecast, but things are looking up on a lot of fronts, and we'll talk about that. So first off, let's talk a little bit about what has occurred in December, not just last week, but a full month here, and it's been fun to say the least. So Santa has come to town, and small caps have roared back, kind of come to life here. So, and by the way, this is as of December 27th, depending on when you're watching this. But so this the idea behind Santa Claus Rally, and it is real. It's a phenomenon where the stock market makes bigger than usual gains at the end of December and usually the beginning of January. Not always. It's not a given for sure, but it does happen more often than not. In fact, December's been the second best month for the Dow Jones, going back over 50 years. So again, it's a phenomenon. It doesn't always occur, but it is nice when it actually does occur, and it has this year in full force so far, at least. And so that's kind of what we're in the midst of right now. And what we're seeing is that, and by the way, this Santa Claus Rally, basically every 3 out of every 4 years, this rally kicks into high gear. And so when I say more often than not, it overwhelmingly does occur. What's been even more unusual about this one is just the sheer trajectory of it, and we'll talk a little bit more about that here in a second. But it's just been fun to watch. Everything is kind of rising at once, which is pretty rare when you're using a pretty vast asset allocation strategy. But it definitely has been a lot of fun to watch. So let's kind of jump into it. So this is looking back. I usually do the 5-day performance, but again, I'm going to spread this out a little bit, and we'll look at the 1 month. And so we've got Dow Jones up 6%, S&P 500 up 5%, Russell 2000. Again, this is small caps. This is what I was talking about. Small caps roaring back 14% in a month. So if you've opened statements, or if you opened the November one, it was actually, it started back in November, so you probably noticed that as well. Some of those smaller positions really coming to life, and you will see that on your December statement as well. Well, they've just screamed higher. This is pretty historic stuff. You typically do not see any asset class scream up 14% in 1 month, and this is what we talked about in terms of breadth. We needed to broaden out the market rally beyond just your mega cap growth stocks, is you really need more participation to sustain a rally long term. And so who knows, maybe that's the start of a larger breadth of the rally in the market. Small caps have really relatively speaking have underperformed for quite some time relative to large cap stocks, and so seeing small caps roar back to life is a really good thing. It's healthy, and we need that for sustained rally and economic growth. So NASDAQ up 6%, very healthy month. And MSCI EFA up just a little more than 4%. And that, of course, is your foreign stocks. So across the board, just a stellar month. And then let's take a look at year-to-date performance. Again, this is just, when you look at a 45% return on any index, you're looking at pretty historic stuff here. This just doesn't happen very often. Obviously, that pace and that trajectory, is it just going to continue to scream high, high, high? Maybe not. It's hard to say. Of course, things always level out in one asset class that tends to be screaming higher one year, can easily flip-flop on you next year. Hard to say. But this, for 1 year performance, 45% is not something you see very often. So, and that is indicative of a very large tech, kind of growth-oriented stock rally. And so this is just an unbelievable number. But across the board, by any measure, this has been a phenomenal year for stocks, which is hard to believe given what we've had to overcome with inflation and rates. Just this monster of data hitting us this year, and the market has just been climbing. You've heard the term "climb the wall of worry." Well, it's climbing it, unlike anything I've seen in a long time. So, really phenomenal returns all around. So, really shaping up to round out the year, just really, really strong heading into 2024. So let's take a look, and I'm going to talk much more about what is driving that economically, beginning into January. So we'll be kind of looking back on not only the quarter, but the year and some of those economic metrics. Here, I'm just going to be focused more on the market, keep this short and sweet. I know a lot of you are still on break, and I'd like to take a little bit more time off before the new year. But so rates on this has really been the driver. I mean, to be frank, not everything, but rates have continued to come down. So this is a pretty dramatic drop. The 30-year Treasury is now below 4%, 3.96. The 10-year, 3.79, and the 2-year, 4.22. All of these have come down substantially. Of course, it's still inverted, seeing the 2-year above the 30-year, so we're still inverted. But these have all come down substantially. Even the 30-year mortgage rate, which tends to lag a little bit behind some of these front-end rates, has come down to close to 7%. It was at one point over 8%. So again, this is a pretty dramatic drop, all in the course of about 3-4 weeks, essentially. So this has been, and this is, I think, indicative of the market anticipating not only rates plateauing, but maybe even rate cuts into 2024. So that remains to be seen, but that's clearly what's on the mind of the market right now. So, phenomenal year for stocks, no question about it. Here's another fun thing to see is bonds are showing signs of life again. As these rates have come down, bond prices move inverse to rates. And so as rates have come down, prices have come up. And that's exactly what we're seeing in terms of bond performance here. So this is the aggregate bond index. So we've got it's the Bloomberg aggregate bond index, and it's kind of indicative of the entire bond market. And that is up over 5% year to date. But if you look back over this 1 month period here, so this is the 1 month, you have the Bloomberg aggregate, which I just talked about, and then the Bloomberg credit. So this is primarily your corporate bond index. I just wanted to have them both on there for good measure. But this is just the 1 month return. So although the ag bond index is up 5% year to date, you can see that the vast majority of that performance has come very recently with the drop in rates. And so this performance is relatively recent, this real boost in returns here as we enter the latter part of the year. So everything firing on all cylinders, which is a lot of fun to see. Diversification by definition, I mean, you're typically gonna have some things that aren't doing well and some things that are, and that's just the name of the game. But lately here speaking, we do have a situation where all things are rising, and that's been a lot of fun to see. So hopefully kind of brighten your day a little bit as we end the year on a high note. And hope you guys are enjoying your Christmas break and have a little bit more time as you head into the new year and have some time off around that. And I'll be writing and doing more videos around this year and leading into next year. So thanks for tuning in, guys, and hope to hear from you soon if you have any questions or concerns. If you like this type of content, go ahead and hit that subscribe button down there, and we'd love to have you follow us and check out all our videos. So, okay, guys, Merry Christmas and Happy Holidays and New Year if I don't speak to you, but beyond that, I will be in touch soon. Thanks.